Most of us thought the economy would be better now, but many folks are feeling credit pressure. A credit squeeze can show up in many forms: higher interest rates, late payments, penalties, wage garnishment, even repossession or eviction. Presidents Truman and Reagan used to say, when your neighbor loses a job, it's a recession. When you lose your job, it's a depression. And if you have a lot of credit overhang and then a loss of or reduction of income, yikes. We've got to take credit action with several proven ways to take back some control and relieve financial pain. Here's where to start. You're in a hole, you've got to stop digging. And I'm going to give you 13 credit action steps. And here we go. Number 1, go on a credit fast until you can gain at least some control. Number 2, if you've missed a payment or are behind, contact the lender. Number 3, check for accuracy, the address, the email, the text number. Is there a proper account number? Are there overcharges that might be negotiable? Late fees that might be waived? Interest rate escalations if you are late? Look for and report a cyber breach, charges that are not yours, and change your password. Watch for other forms of ID theft, and double check any automatic withdrawals or payments you may have to change or temporarily suspend to gain control again, and not let that be on automatic pilot. Number 4, request and adjust the payment due date. You might have too many obligations colliding together that are mistimed for income, thus creating a negative credit spiral. You're watching What's Next with Money, a program with smart insights to guide your financial decisions. Number 5, check the 3 main credit bureaus, and you can do this for free at annualcreditreport.com. We'll have a link. These are the bureaus of Experian, TransUnion, and Equifax. Number 6, monitor your credit score. And these are often now available free from some of your lenders, banks, and credit card companies. Number 7, contact reputable credit counseling and related cash flow spending organizations. And you can find them at the National Foundation for Consumer Credit, nfcc.org, Money Management International at moneymanagement.org, and of course my colleagues at the Accredited Financial Counselor program of the AFCPE at findinafc.org. We will have links. Plus, and I've gone to one of these meetings just to check it out, there's Debtors Anonymous for those with chronic debt problems at debtorsanonymous.org. Now, I want to plug something that we offer in the comments section on every video, and certainly always in the description. And this is our free PDF called How to Take Control of Your Finances. This gives you context about attacking credit, dealing with savings, spending, and just all the fundamental ways to give you a sense of financial control. And that's really what the topic is we're talking about today in the credit and debt world. You'll really like it. All the links are tied to nonprofit and government agencies, and it's just great advice, and it's all free. Here's tip number 8. Do I have an emergency fund? Now, when attacking credit and debt problems, creating or rebuilding an emergency fund, even while you're trying to reduce those credit obligations, is important. Even if it's like $20 every 2 weeks, that can be meaningful. And this helps avoid taking on new credit or borrowing and adding to the current problems. Even your kids can pitch in on this from earnings they might have, a little percentage. And then you as a family can celebrate the triumph as you implement your family debt attack plan and rewarding your kids as the debts come down. So number 9 is list what you owe. From my friends and background in the military, this is situational awareness. It's really, where am I? And this could be things you owe that you just don't want to think about and you may have put out of your mind. Here's a big one. friends and family, parents, in-laws, outlaws, brothers, sisters, kids, friends, workmates, church help that you might have received. It kind of needs to be paid back. Car loans, credit cards. We have a few on display for your pleasure here. This includes store branded cards, which are often very expensive. Convenience checks in the credit card statements. Beware of those. I even did a congressional testimony on financial literacy, and I mentioned these at the congressional hearing in the House, and I got several congressmen pop their heads off and say, I get these convenience checks that I could just write for money on my credit card. And they said, I didn't ask for these. Well, just be careful because they're very volatile. And retirement accounts, think about 401k loans you have, and you really want to pay those back because that's depleting your future payback in retirement savings and investments. Then there's the IRS. We have a great video covering federal taxes in general, but this is the case of the federal taxes. And then you actually might owe state taxes, and that's usually called state revenue departments. You may be behind in local property taxes, and that's at the county level. And then, of course, one of the big ones is student debt. Look for income-based repayment plans. Look for student loan reduction benefit at work, and more employers are offering this. They can waive up to $5,000 per year of student loan debt repayment, tax-free. Fantastic program. Ask about it. Parental plus loans may have been taken out to help your kids, and medical debt. Now, medical debt, there's a lot of work on this related to credit bureaus and credit records, but seek out hospital social workers and debt counselors. For large institutions, they have a lot of ways to kind of work this debt out, and they might be able to discount quite a bit and help you locate other sources for paying this off. And then we have the new phenomena of buy now, pay later. Actually, it is growing in popularity. I've been fortunate in some of my regulatory work to meet one of the founders of one of the largest buy now, pay later companies in the US and globally. And I did a video on this about buy now, pay later, we call BNPL. Now, mortgage and second mortgages, we covered those in other videos. And then, of course, there's something, if you're big and have a brokerage statement and have quite a bit of money there or some money, you might be eligible to have done a asset-based borrowing from the brokerage firm. This includes margin loans, but I'm talking more about borrowing with your collateral being stocks in your brokerage firm or mutual funds portfolio. Fintech apps, we have to watch those. They could kind of get us a little bit out of control, and they can kind of fight with each other. This could be a lending and a fee drain. And then a big area I've worked in for years is online or in-person gambling and gaming. And we cover this in another video. We'll have links to all these videos. Then on the internet, there's a lot of weird, likely illegal internet-based lending. Often a distortion of tribal sovereignty and try to go around different types of lending regulations. And usually those get shut down, but be careful and be wary of those. You may have other types of accounts in arrears like rents, utilities, homeowners association dues or assessments, car repair. You might have other repairs or maintenance you've done to your home through the help of handymen and handy women. Now, we have the so-called predatory or high-interest fee lenders, which include payday lenders, check cashing, pawn shops, rent-to-own, auto title lenders, refund anticipation loans. That's where you end up paying high fees to get an early tax refund. And now with electronic filing, that refund, you pay extra fees for that, getting this loan called a RAL, R-A-L, refund anticipation loan. If you can just wait a few extra days, you're going to get your money in whole without jumping into one of those loans. You really don't need it and can wait. And then there's this phenomenon called 90 days or 6 months, same as cash. You hear this on TV a lot. Interest-free financing for furniture, home improvements, and appliances. Well, I tried one of those years ago, and just be careful because they're going to do anything they can to trip you up so you won't keep current. And if you mess up one payment, there ain't no interest fee left. You're going to be hit with high charges in the high 20s or higher. If you're getting value from this video, be sure to hit that subscribe and smash that like button. This moves our content to more folks, and it's all free. We appreciate the recommendations. Now, number 10, gather key facts for each obligation. And what do we mean here? The key elements, interest rates that are charged, and including, are there late fees or a change or increase in the interest rate if you are late? Due dates, extra fees like late fees or other penalties. What are the minimum monthly payments? And they may change as you pay down debt. Balances due. And know your rights under new debt collection rules by the CFPB, where I was chair of an advisory board, Consumer Financial Protection Bureau, and the FTC, Federal Trade Commission. We will have links to both of those. And then number 11, debt payoff tactics. And of course, the two most effective ones are the snowball method, and we're going to tee them up against each other, versus the avalanche method. And this information comes from our friends at Wells Fargo. The snowball method means paying off the smallest of all of your loans as quickly as possible. And you got to pay more than the minimum to attack that debt and pay it off. And again, we're moving from smallest to largest. And once that debt is paid, you take the money you were putting toward that payment and roll it onto the next smallest debt owed. Now, ideally, this process would continue until all accounts are paid off. As you roll the money used from the smallest balance to the next on your list, the amount snowballs. And the snowball method is one of the favorites of radio host Dave Ramsey. And this gets larger and larger, and the rate of debt is reduced, and it's accelerated. This is a huge motivator, probably the preferred method. Then there's the avalanche method. I think about avalanche living in Colorado, but you're focusing on paying the loan with the highest interest rate, the one that gives you the most literally financial and numerical pain. Like the snowball method, when the higher interest debt is paid off, you put that money toward the account with the next highest rate, and so on until you're done. Again, you're paying beyond the minimum. But by focusing on the loans that are most expensive to carry, in the long run, you should pay less over time, as higher interest rates loans are addressed first. Now, you're going to save some money with the avalanche method, but if the principal is large, the time it may take to pay off debt with the highest interest rate, or kind of a big loan, can be discouraging and make it difficult to stick to the plan. Paying off small debts quickly, the snowball method, can feel more rewarding. You sense your progress. It might be a better fit. Number 12, bring in income. This could mean a second or third part-time job. And when I say a third part-time job, it might mean a seasonal or weekend activity. It's kind of rare. And then there's the gig economy, Uber, Lyft, DoorDash, Airbnb, or you can sell or return items like Facebook Marketplace, OfferUp, and eBay. And plan for that tax refund. We have a video on taxes, and I think it'll describe the various ways you can effectively use a refund to get ahead financially for you and your whole family. And number 13, be careful and get ethical counseling before considering a balance transfer credit card that might have no or low interest for a set period of months. Now, there might be fees, special expiration dates for the introductory rates, and possibility of higher rates than you are now paying after the introductory rate is over. And you may not even be able to qualify. You can see Bankrate or NerdWallet to be able to compare and get some additional tips. Beware of loan consolidation shops. Daily pay apps from employers. That's where you, instead of you get a paycheck every week or every 2 weeks, you can pull down pay in the middle of that period. This kind of makes budgeting and paying for things like rent a little out of control, because you may have spent that money before you need it to pay those big obligations. And of course, beware of online offers of credit, and then the predatory lenders that we all previously listed. Watch out for credit repair agencies and firms. And the IRS has its slew of debt settlement companies clustered around the tax issue. Again, see our video on taxes first. The IRS has a lot of ways to pay taxes back that are perhaps less onerous than debt settlement companies. Well, that's our 13 credit action steps. And remember 2 points. Number 1, if you're in a hole, stop digging. And 2, get the What's Next with Money free handout, how to take control of your finances. Be sure to hit that subscribe and that like button. I'm Brent Neiser, looking to see you next time on What's Next with Money, and check out our video on Buy Now, Pay Later.